Welcome to the deep dive. Today we're diving into something that honestly feels like it's pulled straight out of a futuristic thriller, but it's happening right now. Imagine a major global power fundamentally shifting how it holds its national wealth. What if that wealth suddenly included something as new, as disruptive as cryptocurrencies? Okay, let's unpack this.
It's fascinating, isn't it? And what's really key here, I think, is not just what happened, but the why now, and the potential ripple effects this could have globally.
Absolutely, because we're talking about March 2025.
Mm-hmm.
The United States made this, well, historic move,
Mm-hmm.
establishing a strategic Bitcoin reserve and a separate digital asset stockpile, all via an executive order from President Trump.
A huge step.
Huge. So our mission today is really to give you a shortcut to understanding this. We'll trace the history, the backstory leading up to it.
The evolution.
Exactly. Explain the mechanics of these reserves, look at the reactions, which were, frankly, all over the map, from governments, from experts, and then try to place it in the bigger picture of, states holding digital assets.
So where do we start? The origin story, I suppose. Trump's stance on crypto wasn't always like this.
Not at all. That's what makes it so interesting. You have to look back at his first presidency, 2017 to 2021. He was pretty vocal then, wasn't he? Disapproving of Bitcoin, cryptocurrencies in general.
He was quite skeptical, so tracing that shift, that evolution, is key to understanding the March 2025 decision.
Right. And you can almost pinpoint it through specific events, key people. Like July 2024, J.D. Vance picked as the running mate.
The first VP candidate known to actually own Bitcoin, that was a signal.
A big one. And then later that same month, Trump himself says, if elected, he intends to set up a Bitcoin reserve.
And it wasn't just talk. You had Senator Cynthia Lewis, who's, very pro-crypto.
Right.
She introduced the Bitcoin Act, also in July 2024, proposing a massive purchase, 1 million BTC for a reserve.
A million Bitcoin. Wow. Although that got blocked, didn't it?
It did, by Senator Sherrod Brown, which also shows the political hurdles, right? Even as the administration's stance was shifting, there was still significant opposition.
Good point. But the signals just kept coming. August 2024, Trump discloses owning Ethereum himself, between $1 and $5 million worth.
Mm-hmm. Then the nominations started rolling in. November 2024, Howard Lutnick, for Secretary of Commerce, reportedly owns hundreds of millions in Bitcoin.
Hundreds of millions. And then December, Paul Atkins for the SEC, someone involved in crypto advocacy.
Yeah, a real contrast to Gary Gensler, the previous SEC head, who was well known for wanting pretty sweeping crypto regulations.
A definite change in tone, at least at the nomination level.
And it continued. January 2025, an executive order sets up a presidential working group on digital asset markets. And they floated the idea of using seized crypto for a stockpile.
Using assets already on hand, essentially.
Exactly. Then February, you had congressional hearings about alleged efforts by the previous administration, the Biden administration, to suppress crypto.
Right. And another key appointment. Brian Quintenz, another crypto advocate, nominated to head the CFTC.
So the stage was really being set.
It really was. Which brings us to March 3rd, 2025. The pivotal announcement. Trump names specific coins, Solana, Cardano, Ripple, Ethereum, and Bitcoin for the reserve.
It explicitly states the goal: make the U.S. the crypto capital of the world. Support the industry.
And the market reacted instantly, right? Solana, Cardano, XRP prices jumped immediately after that.
They did. So after all that buildup, the executive order itself dropped on March 6, 2025. What did it actually do?
Okay, so maybe it helps to think about things like the Strategic Petroleum Reserve or Fort Knox for gold, reserves for national security or stability.
That's a good analogy. Establish two separate things.
Right. First, the Strategic Bitcoin Reserve. This one's meant to be permanent. And crucially, it's funded by Bitcoin. The Treasury already got through forfeitures, like from legal cases.
Okay, so using assets already seized?
Exactly. And the order says the U.S. will not sell these coins. And it even mentions exploring taxpayer-neutral strategies to get more Bitcoin, ways that don't cost the public directly.
Interesting. Taxpayer neutral. I'll have to see what that means in practice. And the second thing?
The second is the U.S. digital asset stockpile. This is for other digital assets, not Bitcoin, also forfeited to the Treasury.
So altcoins, basically.
Yeah, pretty much. But the key difference here is the order says no additional assets will be bought for this stockpile beyond those forfeitures.
Ah, okay. So Bitcoin might grow through other means, but the stockpile is just what's seized. And the Treasury might figure out what to do with those, maybe even sell them eventually.
That seems to be the implication, and
Yeah.
the scale here is just, well, it's huge. The U.S. was already the biggest known state holder of Bitcoin before this, estimated around 200,000 BTC by March 2025.
200,000 Bitcoin, that's a significant chunk of the total supply.
It really is. Now, the order did set some deadlines: 30 days for agencies to report their holdings, 60 days for Treasury to propose legislation.
Did we hear anything back on those?
Well, that's the thing. Those deadlines passed, apparently without any public updates coming out from the agencies or the Treasury Secretary. So, still some questions there.
Okay. But the executive order wasn't happening in isolation, was it? There was a flurry of activity around that time.
Absolutely not. It felt very coordinated. The day after the order, March 7th, there was a digital asset summit at the White House.
Right, with all the big U.S. crypto players. Chainlink, Gemini, Robinhood, Kraken, MicroStrategy, Coinbase, Paradigm.
Sending a very clear message of government engagement with the industry.
And the policy signals kept coming thick and fast.
They really did. Senator Loomis, just a few days later, March 11th, reintroduces her bill to buy that 1 million BTC over 5 years, trying to put the executive action into law.
And then that comment from Bert Hines on the President's Council of Advisors on Digital Assets, suggesting selling U.S. gold to buy Bitcoin.
Yeah, March 24th. That was
Yeah.
bold. Talk about a strategic shift, selling gold for Bitcoin.
It definitely signals how seriously they were considering Bitcoin as a core reserve asset, potentially on par with gold.
And regulators were moving too. March 2025, the OCC and FDIC basically said donks didn't need prior permission for crypto stuff anymore.
Lowering the barrier for banks to get involved.
And then in April, the Justice Department actually disbanded its national cryptocurrency enforcement team.
Wow, disbanded it. Why?
They cited a Trump order about allowing citizens access to blockchains without persecution. So a real shift in enforcement focus too.
It seems like a full court press across regulation, enforcement, and policy.
And topped off in July 2025 with the signing of the Genius Act, the Guiding and Establishing National Innovation for U.S. Stablecoins Act.
Ah, yes, the stablecoin legislation,
Yeah.
allowing banks, non-banks, credit unions to issue stablecoins.
So, yeah, not just one order, but a whole ecosystem shift seemingly underway.
Okay, so the U.S. makes this massive move, sets up these reserves, signals broad support. How did the rest of the world react? What was the global response?
Well, definitely not monolithic. Very mixed reactions. Let's start with economists. Remember that University of Chicago survey from February 2025?
Vaguely. What was the headline?
The headline was pretty stark. They surveyed a panel of economists, and not a single one agreed that borrowing money to create a crypto reserve would benefit the U.S. economy or reduce risk for central banks.
Not one. Zero. That's a powerful consensus against it, at least from that group.
It really is. It highlights that deep skepticism in traditional economic circles about, the stability and wisdom of holding volatile assets like crypto as national reserves.
Interesting. So economists were highly skeptical. What about market analysts or ratings agencies?
S&P Global Ratings had a slightly different take. They called the executive order mainly symbolic, but still significant.
Symbolic but significant. How so?
Symbolic, perhaps, because the initial funding was from seized assets, not new purchases funded by debt, which is what the economists seemed worried about. But significant because it was the first formal recognition by the U.S. government of Bitcoin as a reserve asset. That carries weight.
Okay, I see the distinction. Governmental validation, even if the immediate financial impact was debated.
Exactly. And Deutsche Welle, the German broadcaster, did a good job laying out the pros and cons people were discussing.
What did they see as the upsides?
On the pro side, potential for enhancing financial stability through diversification, not putting all your eggs in one basket, so to speak, boosting crypto's legitimacy, especially for institutions, and using seized assets smartly without hitting up taxpayers.
Makes sense. And the downsides.
The cons were pretty serious, too. It's inherently speculative, right? The benefits aren't clear. There's a risk of market manipulation if a government holds that much. And without Congress fully backing it with legislation, it faces legal and political challenges down the road.
A real split, then. High potential reward, but also significant risk and uncertainty. How did actual governments react internationally?
Again, very mixed. Some seemed encouraged or intrigued. Belarus, for example, said this U.S. move showed crypto's global importance and that Belarus should boost its own crypto mining.
Interesting. Using it as justification.
Right. Pakistan announced plans to use surplus electricity for Bitcoin mining. And India said it was reviewing its own crypto stance. because of these global shifts.
So some countries saw it as a green light, or at least a reason to reevaluate.
But others were far more skeptical, even resistant. The European Union, for instance, raised big concerns,
What were their main worries?
primarily about monetary sovereignty and financial stability. They were worried about risks to their own digital euro project, especially from stablecoins potentially issued by big U.S. tech companies under that new Genius Act.
The competition aspect and control over their own currency.
Exactly. The president of the European Central Bank was very clear. Bitcoin will not enter the reserves of any of the central banks of the EU. Full stop.
Wow, a very firm line from the ECB. What about other major economies?
South Korea said they weren't considering Bitcoin for reserves due to its volatility and because it doesn't meet IMF criteria for reserve assets.
Okay, sticking to traditional metrics there.
And Switzerland, which you might think would be open, given their financial sector, they actually rejected the idea too.
Switzerland rejected it. Why?
Their reasoning was interesting. They cited volatility, Bitcoin's relatively small market cap compared to traditional assets, and they even called Bitcoin software.
Software. That's a unique framing for a reserve asset discussion.
It certainly is. So you have this spectrum from encouragement in places like Belarus and Pakistan to outright rejection from the EU and skepticism from places like South Korea and Switzerland.
And this wasn't just playing out internationally. You mentioned movement within the U.S., too, at the state level.
Oh, yeah, definitely.
Yeah.
As of March 2025, something like 16 U.S. states had introduced bills related to holding Bitcoin in state reserves.
16 states. That's quite a ripple effect domestically. Any successes?
There were a few showing different approaches. Arizona passed a bill, HB 2749, allowing the state to use seized crypto for reserves. But, and this is key, it specifically prevents them from buying more Bitcoin with state money.
Okay, so mirroring the federal approach somewhat using found money, not new appropriations.
Right. But then look at New Hampshire. They passed HB 302, which does allow their state treasurer to invest in assets like Bitcoin and does allow them to potentially buy more.
So New Hampshire went a step further. Actively investing, potentially?
Seems like it. And Texas also jumped in, signing SB 21 to create the Texas Strategic Bitcoin Reserve. Though the specifics of funding there might differ again.
So even within the U.S., states are taking different paths. Some cautious, some more aggressive.
Exactly. And bills in other states like Florida, Montana, Wyoming, they either failed or were still being debated. So it's an ongoing process at the state level too.
Okay, so the U.S. made its move, reactions were mixed, globally and domestically. Let's zoom out a bit. Who else is actually holding significant amounts of Bitcoin at the state level? Because the U.S. wasn't starting from zero.
Right. As we said, the U.S. is the largest known holder, around 200,000 BTC as of mid-2025. But they aren't alone. Here's where it gets really interesting geopolitically.
Who else is in the game?
Well, China is estimated to hold a massive amount too, around 194,000 BTC, mostly from seizures, similar to the U.S. initial stash.
Nearly as much as the U.S., okay.
Then you have the United Kingdom, holding over 61,000 BTC. Ukraine holds a significant amount, nearly 46,000 BTC, much of that apparently from donations after the Russian invasion.
Right, the wartime crypto donations.
And then there's Bhutan. This one's fascinating.
Bhutan, what's their story?
They've apparently been quietly running large-scale Bitcoin mining operations for years using their hydropower. They've accumulated over 13,000 BTC, reportedly worth around $750 million.
$750 million. For Bhutan, that must be huge relative to their economy.
It is. It represents something like 28% of their entire GDP, a massive bet on Bitcoin mining.
Wow, that's incredible. A small nation making such a focused play.
Isn't it? And of course, El Salvador, the first country to make Bitcoin legal tender, they hold over 6,100 BTC. Finland and India also hold smaller amounts, often from seizures.
And Iran has a unique model, right? Requiring miners to sell Bitcoin to the central bank.
Yeah, to fund imports. So, various models are emerging.
It really is a global patchwork. So those are the known holders. What about countries considering or proposing reserves now, perhaps spurred by the U.S. move?
There's definitely activity there. Parliaments in Argentina, Brazil, and Hong Kong have seen bills introduced for their central banks to hold Bitcoin.
Argentina and Brazil, interesting given their economic situations.
And Japan. Their massive government pension investment fund, the GPIF, is reportedly exploring diversifying into Bitcoin.
Japan's pension fund. That would be enormous if they actually did it. They're traditionally very conservative.
Hugely significant if it happens. Russia also saw an official proposal floated for a strategic Bitcoin reserve, apparently after President Putin praised Bitcoin as an alternative to foreign currency reserves, especially under sanctions.
Using it as a potential sanction workaround.
Seems to be the thinking. And the Czech National Bank mentioned, considering holding up to 5% of its reserves, that's about 140 billion euros total in Bitcoin.
5%. That's a substantial allocation for a central bank.
It really shows how the conversation has shifted, doesn't it? From fringe idea to central bank consideration.
Absolutely. If we connect this to the bigger picture, this decision by the U.S., it really isn't happening in a vacuum, is it?
Not at all.
It's part of this fascinating sort of global dance around digital assets. And it could genuinely redefine things like national sovereignty, financial stability, how nations project power, which raises a really important question.
Yeah, exactly. So what does this all mean for you listening and for the future of national wealth? Is this U.S. move going to kick off a global digital gold rush? Or is it just too risky, a high-stakes gamble that most other nations won't be willing to take?
Mm-hmm.
We'll leave you with this to think about. How might these national strategic Bitcoin reserves, if they become more common, reshape global power dynamics? And what could that mean for individual financial freedom in the years ahead?